Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update for this afternoon, the close of business already, in a number of markets. So, as we're here looking at the markets, we got the Apple earnings, and they did take the market down. The aftermarket in Apple was down about $2.50. They did better on the earnings, but they missed on the revenue. So, pretty flat. We'll see what Facebook comes in at tomorrow, and these are the big boys. As you can see, gold gained a bit today as silver lost and the copper market lost. Still a slowdown, according to market, on the PMI, the manufacturing PMI in China. We've got other issues going on where if you take a look at the energies, we finally did get a bit of a draw on the API number on gasoline, the distillates, and stocks. Now, we need to get in the morning through the EIA number. If the two match, I think the market will feel better. But it wasn't that much of a rally late in the day off of the lows, and that is a bit bothersome. And in the grain markets, what went up yesterday came back down today to a degree. So let's take a look at the finish of the business today, because these markets were a bit lower in the aftermarket, but this is where they finished anyways. You're still in an upthrust. People still talking the 2400 level, an important resistance zone. I'm looking at it, and that's the weekly chart. As you come to the area chart of closes, you can see how the market got up here to the 2386 level and sort of stalled out right now. If we break down, and that's an if, I'm not saying it's going to happen, this gap is likely to be where the market tries to fill. If you get a day where the market opens up and leaves another gap, it's called a runaway gap, and that could carry the market a lot higher. More times than not, markets try to leave no gaps on a chart. Keep that in the back of your mind. With today's action, if you were to take out 2377, the lows of yesterday, that would be bearish action on the market for a couple of reasons. Number one, you had an outside day up yesterday. You should not take out the low of an outside day up within 2 trading sessions is my rule on a daily chart. If you do, prices often sink back either to the closest moving average and or a Bollinger Band. Number 2, that would break the swing line pattern. You could end up with lower highs and lower lows. So that should not be violated. So that's a good number to know. If it is, the 2360 area is probably where support starts showing itself. If the market instead decides to rally from here, because it is in an uptrend, let's not forget that you got higher lows, higher highs, then the 2398, that 2400 zone, is back in play again, and you have a market that is very overbought. So it's going to be an interesting 2 days. Not only do we get Facebook tomorrow, we're going to get the FOMC statement. Remember, there is no conference afterwards, so it's just a statement that we're going to get. And I guess a lot of people are going to tune into not about when the interest rate's going to hike, but what about the balance sheet. And I think you're going to hear a lot of people wanting to hear about that tomorrow. Is the Fed going to start shrinking the balance sheet? If so, when? If so, how? So there's a lot of different things here. Still have the pattern of higher lows, higher highs in the Dow. Overbought as can be. No gap left on the chart in the same manner that we did, that I could see at least, on this chart like the S&P. The NASDAQ's the poster child of bullishness. Embedded reading, riding the upper Bollinger Band, still the powerhouse. I'm tired of saying it, but it's what it is. And we're starting to break down in a fairly big way in the Russell. Now, if we take a look at yesterday's action in the Russell, we had a high of 1410.40, a low of 1395.10. 1410.90, 1394.10, and a lower close. Guess what we have? We now have a market that I can argue has got lower highs and If we take out this low right here, I'm going to get comfortable staying. If you take out 1394, you've turned the swing line down, momentum's turned down, and you're likely to go back to 1380, 140. So we have divergence. We have divergence between the Russell especially and what is going on in the NASDAQ. The other indices are just sort of hanging sideways. A little bit of a bounce finally happening in the VIX, but it's trying to develop an embedded reading. One day doesn't prove anything. Take out 990, and I think the market starts letting go to the downside. If it goes down, it's generally friendly stocks. If it rallies here and takes away the opportunity to embed with a good rally, especially over 1108, that could be the sign that the stock market wants to come down. Right now, the VIX is still saying stocks as a group are still in pretty good shape. In the bond market, we had a big outside day down yesterday. We rallied back today to the 18-day average. Didn't have the power to take that out, but it's going to be hard to trade the bonds and or the notes in front of the FOMC meeting. My advice now is let it get out of the way and take another look. When you look at the ETF TLT, which is made up of, I think it's around 20-year bonds, take a look at notes, really. Take a look at what's going on. Still in very much a downtrend. Oversold. You'd have to take out 122.35 to negate the trend. And the 10-year note got up high enough today to take out this high. It actually threw out a buy signal. So you got different things happening in the curve yield. Now you got higher lows, higher highs. You're over the 18-day average. Until you're back under 125.09, this market actually threw out a buy signal going into tomorrow's report. The dollar index is still looking quite bearish. Embedded reading first, lower highs, lower lows. I wouldn't be surprised if it makes a run down to the 98.11 area if this pattern holds up. And again, got to still get through that FOMC meeting. In the euro currency, overbought. Higher lows, lower highs. I'm not comfortable with that type of pattern. I could go back here and say that you had higher lows and a higher high there, and since then it's all narrowed in, and that's where I'm going to leave the statement. In the British pound, the embedded reading still portends that each time this market breaks, until that is lost, the market holds those breaks and it tries to move back to higher highs. In the Japanese yen, all the way down, it's getting pretty close to what I had told you. I wouldn't be surprised, I said earlier, that if the market breaks enough, you'll get to the lower Bollinger Band. What I didn't expect is the two to come together with the 100-day moving average of closes, and they are. So this market's still under a lot of selling pressure. And take a look at the crude. Got embedded readings, you got lower highs, lower lows. This market is falling apart. OPEC, where are you? Nothing's working. And what about gasoline? Same thing. So sooner or later, what you got to be worried about in gasoline, does demand show up for it? If it does, are we through with the imports because prices have fallen so much that they don't make sense? I can't answer those questions. I can tell you that until you get back over 158.79, the market's locked into a bear trend. In the nat gas, you've got a higher high, a lower low. Not much you can do with that. Momentum flat to pointing lower. I'll give the day to the bears. They still seem to have control of that market. Let's for a moment talk about trading in markets that are all over the board. And that's what Modern Trader put together for us. Profitable trading strategies in any market. And that's exactly what you've got. These are what the articles look like. And this PDF, we have another one we can send hand in hand with it, shows you how to work with trend trading in the flat base pattern. I'm just trying to move over so you can see what the articles look like, back and forth, 10 rules to follow. It's really neat. It's got its own readers. It's easy to read. Give us a call. Go to our website to get this. Sign up. When you go to the website, you're going to see a carousel of free offers. Be sure to choose the profitable trading under any type of condition market. Click here if you're watching me on YouTube, or under us on many websites. It'll say, click here for Ira's free offers. Do so, and we'll take it the rest of the way. I'm Ira Epstein. You have a good day, and I will talk to you all on Wednesday.